All right, let's just jump right into it. Right now, it feels like everyone is completely obsessed with the scary headlines. High oil prices, the threat of recession. But while everyone's looking one way, they might be missing the real story. And this really gets to the heart of it. This idea from our source material is powerful because it suggests that all this fear might actually be creating a massive blind spot. And in that blind spot, a huge opportunity is taking shape as we speak. So here's how we're going to break this all down. First, we'll tackle that market fear head on and see why it might not be what it seems. Then we'll look at what history can teach us. And after that, we'll get to the exciting part, the AI gold rush and what I think are the two most critical bottlenecks and opportunities, energy and memory. You hear it all the time. Investors are climbing a wall of worry. And it's true. There's endless talk about oil, about inflation, a possible recession. It feels really uncertain out there. And you can see that fear driving a lot of decision making. Now, this is such a key insight into how markets work. They have a tendency to, shoot first and ask questions later. The second there's a whiff of bad news, they immediately price in the absolute worst possible outcome. But what if that fear is overblown? That's where opportunity is born. Every single time there's a downturn, you hear those four famous words. This time, it's different. But is it? Really? If we look back, history shows us that these cycles of fear and recovery are pretty normal, and understanding that is absolutely crucial. Okay, take the word stagflation. It's that awful mix of high inflation and high unemployment. The media throws that term around constantly, making it sound like it's always just around the corner. But in the last 70 years, you know how many times it has actually happened? Once. Just one time. Back in 1973. It's a huge event, for sure, but it's also incredibly rare. So this is the real question, isn't it? This is the fear that paralyzes so many people. We see those big red numbers and we think, that's it, it's over. But is that what the data actually shows? Just look at this timeline. It shows that crashes aren't some strange anomaly, they're a regular part of the market cycle. We had the dot-com bomb, the 2008 meltdown, that crazy COVID drop, the 2022 bear market, and what happened after every single one? The market recovered and eventually pushed to new highs. And this brings us to a really critical idea about risk. We tend to think that holding cash is the safe move, and yeah, investing means you have to deal with short-term swings. But sitting in cash? That comes with its own risk. The slow, silent, but absolutely certain loss of your money's value over time. Check out this number. Let's say you invested in the S&P 500 way back in 2000, and you just held on. Through the dot-com crash, through 2008, through everything we just saw, you'd be up over 350%. Now, what if you did the safe thing? What if you took that same money and just let it sit in a savings account? Over those same 25 years, inflation would have destroyed 80% of its purchasing power. It would literally be worth a fraction of what you started with. The economist Milton Friedman absolutely nailed it. Inflation is this invisible tax that just eats away at the savings of everyday people. It makes the supposedly safe choice of holding cash one of the riskiest things you can do in the long run. Okay, so enough about the fear. Let's pivot. Let's talk about the opportunity. The real story, the tectonic shift that's happening right now, is artificial intelligence. And this isn't just another tech trend. This is a whole new era. So how in the world do you invest in something this big? Well, we can use a strategy that's as old as the hills. It's called picks and shovels. Think about the California gold rush. Who made the most consistent money? It wasn't the miners, who were mostly going bust. It was the folks selling them the picks, the shovels, and the blue jeans. The exact same logic applies here. Instead of trying to guess which one of the thousands of AI startups is going to be the next big thing, the idea is to invest in the fundamental, non-negotiable stuff that every single one of them needs to survive. Those are the picks and shovels of today. So that brings us to our first critical bottleneck. The first pick and shovel of the AI age is something you might not even think about at first. Energy. Pure, raw power. You simply cannot build this future without it. You see, AI data centers are incredibly power hungry. They consume enormous amounts of electricity. This creates a massive, growing demand for energy and all the cooling systems needed to keep those servers from melting. So, the companies providing that power are, quite literally, the foundation of this entire revolution. But there's another bottleneck, and this one, according to our source, is even more critical, and it's one that a lot of people just aren't talking about. This is the real choke point for AI's growth: memory. Just think about it for a second. For an AI to be actually useful, say in a conversation, it has to remember what you just said. It needs context. And as these AI models get smarter and do more complex things, their need for memory doesn't just increase, it explodes exponentially. This slide just shows you how wild that growth is. We're starting with today's large language models. The next step up, agentic AI, is going to need about 10 times more memory. And when we get to the holy grail, artificial general intelligence, we could be talking 100 times more memory than we have now. That is just an unbelievable demand curve. So, who's going to supply all this memory? Well, this is the really fascinating part. The high-end memory market is basically an oligopoly. Just 3 companies, Micron, SK Hynix, and Samsung, control something like 90% of the entire world's supply. There's almost no one else in the game. So you see how powerful this setup is, right? You've got this predictable, skyrocketing demand from AI. You have an extremely tight supply that's controlled by just a handful of companies. And then you have these insane barriers to entry. I mean, it takes 5 to 10 years and billions of dollars just to build one new factory. What that all means is you have a really durable investment thesis. The supply is basically locked in for the next decade, while the demand is poised to just go vertical. This isn't about hype, it's about the fundamental economics of a critical technology. And really, that brings us to the final question we should all be asking ourselves. As we live through what might be the biggest technological shift of our lives, where are we putting our focus? Are we getting caught up in the daily noise and the fear? Or are we looking for the essential, indispensable tools that are actually building the world of tomorrow?